Up to this point, I have been holding my emergency funds or my rainy day fund in qualifying money market funds. And in this video, I'm going to cover off exactly what they are they safe? And I'm going to finalize by confirming what I myself am going to be doing with that money, whether it be keep it in there or not. So essentially, they are known as being a low risk and regulated investment that holds short-term, high-quality assets to preserve capital and provide liquidity. They are commonly used to manage cash securely in the UK. Couple of really key points, I think, when it comes to this is that they are regulated, and the regulations over time have become more strict. So essentially, to qualify as qualifying money market funds, there are parameters that should provide some reassurance as to the fact that they are low risk and they are in high quality assets. They were first created in the 1970s. I can count on one hand the number of times that these qualifying money market funds have lost money. Now, I want to very briefly summarize how the qualifying money market funds work on Trading 212 specifically. So essentially, what I'm talking about here is their stocks and shares ISA. If you hold uninvested cash on your stocks and shares ISA within Trading 212 on their platform, then you have an opt-in option to start earning interest on that cash. And when you opt in, you will be put on an interest rate that is currently 4.6%, but it obviously will change, and so you will need to double check what that rate is as you watch this video. When you opt in, you are taking on some risk because qualifying money market funds are not FSCS protected. And what that means is that the value on that money can actually go down because it is an investment. This is why qualifying money market funds can never be deemed as zero risk. When I had a look at the kind of risk ratings for this, we would have the money market funds sitting at around 0.5 on the risk scale, which I think you can agree is pretty low. And as a comparison point, I put the All World All Cap as a globally diversified fund as point for comparison. That's obviously invested in equities and stocks, and that was coming out at around 11.5 on the risk scale. So you can immediately see that these qualifying money market funds are way less risky, or they're perceived as way less risky. In summary, I'm getting 0.1% more interest on my qualifying money market fund in my stocks and shares Trading 212 ISA, as opposed to putting it and holding it 100% securely in their cash ISA. So generally speaking, the trade-off is to get this little bit of higher interest. You are, I suppose, sacrificing the guaranteed security of your financial services compensation scheme, £85,000 protection. With that loss of protection, of course, there is an element of risk. The question of just how risky, I think, is difficult to answer, because while it is seen as very low and almost akin to cash, there is still this distinction, which means there is still a question mark. And of course, while it has not happened very often historically, there has been precedent where qualifying money market funds have run into difficulties. And again, while the regulations have been increasing over the years, we cannot say for certain that that won't happen again. But let's just look at the facts. So right now we have the stocks and shares ISA. If you took £10,000 and you invested that for a year, and let's not forget these interest rates are variable, but assuming that 0.1% improvement in going for the qualifying money market funds, you are only making an additional £10 over the course of a year. I do actually find myself thinking, now that I know the difference, wouldn't I just prefer it to be 100% safe? Because I can really find a firm argument for essentially sacrificing a tenner so that I can sleep 100% soundly and not have to worry about this emergency fund money that I may want to withdraw. I'm going to highlight a portion of this report which I think is particularly pertinent to this video. Essentially, while money market funds are low volatility, their extra yield does come with additional risks. Moreover, those risks are likely to materialize during a period of heightened stock market stress when ready access to cash is paramount. Does that sort of situation ring any bells? I mean, I know I may be overemphasizing the issues at the moment, but certainly that volatility and that sense that people may be wanting to grab their cash real quick, I could see that happening now. And so for me, I think that the extra 0.1% is not worth any more of my time. I have decided to move my emergency fund money into Trading 212's cash ISA.
Ruth was very pleased with her decision. It felt like a no-brainer. 100% security for just £10? Yes, please. But things don't always go to plan. Just as she was editing this very video, the foreshadowed twist struck. Trading 212's cash ISA interest rate quietly slipped from 4.5% to 4.35%. Not a deal breaker, but something to think about. Would you trade a little extra interest for peace of mind? Now then, back to the main video.
And I'm going to be actioning this pretty soon. I just really cannot see enough of an upside to keeping it held as cash, which is earning interest in their stocks and shares ISA. I am, of course, extremely pleased that the product itself is a flexible ISA, and that goes for both their cash and stocks and shares ISA. Flexible ISAs let you withdraw and replace that money within the same tax year without eating into your annual personal ISA allowance. Given that they have this available, I can definitely see some of this money migrating over to investments at some stage. I think the Trading 212 Cash ISA is a really phenomenally good offering. It is competitive in the rate. Now you can find higher rates, but oftentimes with these other products, there are other sorts of restrictions, such as a minimum deposit amount, of which Trading 212 does not have one. You can start with £1. It may also restrict how many times you can withdraw cash without sacrificing some of that interest rate, which Trading 212 again does not do. But if you had any other questions, then please do mention them below. Equally, I've done lots of other videos with portfolio updates and general hyping up of investing and why it is so good. So please do check out that information, and I will see you in the next video.